Hey, how's it going, guys? Welcome back to another video. I just recorded the whole video for this and realized that I was not recording. So now I have to do this whole thing again, and every time I do this, it always ends up being bad because I'm in a rush and I don't want to explain what I've just explained all over again. I'll try to make it quick, but my videos are not quick, okay? My videos, I try to be very delicate with what I say and what I show. So bear with me, okay? Bear with me. The weekly. Let's go on the weekly. Let's analyze what's going on in the weekly, okay? What do we notice? What can we note? We have a bullish week. We've had a bullish week. We've had bullish days, and we've rarely had bearish days. And if it's bearish, that means it was consolidating. Now that we know that, okay, we can have a more of a neutral bias because it's the end of the week. We've reached our liquidity for that week. We've swept most of that liquidity for that week. So I'm not expecting Friday to do anything crazy. And what I also realized a little later in the day, and thanks to Keegan for telling me, is that there was something called, like, I don't know what it was called, but apparently all the options contract in the market go out after like 3 months. So everything was like renewed, and the volume or some shit was fucked up, which was definitely happening today. That was 100% happened, 100% true. So Friday, which is usually a very volatile day for the week. Today was volatile, 100%. We did use the quarterly theory to kind of manage our trade, and we used our bias. So on the weekly, right, I had a mostly daily bullish bias, and the reason for that is yesterday, or actually no, 2 days ago, so Wednesday, right, we took out this high right here, this daily high or daily swing low. Okay, and we took it out with this, so we went a little extra above. And so the next draw on liquidity would be, you would think, this this higher time frame liquidity or swing high, right? That's the biggest thing that we want to see right there. Okay, so with that being said, that was my higher time frame kind of daily / weekly high that I wanted to kind of target right here. Okay. So with that being said, I also noticed that after CPI and all that, we kind of start to not make such big moves, right? We kind of just consolidated in this area, as you can kind of see. And what I should have done was done this. I should have marked out, if it lets me. Okay, never mind. Yeah, so we have higher time frame weekly high, and then we I do have it. Okay. Higher time frame daily engineered buy side, which is up here. I guess these didn't hit. I don't know why I have them marked, because they almost hit. Okay, never mind. So I know there's a lot of drawings here, but if you look, let's actually go down into the 4 hour. Fuck, my voice. Let's go to 1 hour. It's probably better. So the blue here is the daily buy side that we have from 2 days ago, Wednesday. And then the sell side, I had this low from Thursday. Fuck, my voice is like fucking killing me. Sell side down here. Okay. So what I was looking for any day is a sweep of either side, or a sweep of some kind of liquidity. Some kind of reaction of some kind of liquidity or PD array. Okay? Because the quarterly theory needs to have those things in place for the quarterly theory to be correct, or for you to take a trade on the quarterly theory with ICT concepts and all that. In the high time frame, right, you can only mark something as a high time frame if it's on the daily or higher. If it's the 1 hour, it's not a high. It is a high time frame, but it's not considered ICT high time frame PD array. Okay, you can mark it as high time frame. It's an hourly, But to me, I only trade it if it's a higher time frame, like daily, weekly, or even monthly. If it's anything in the 4 hour, I just mark it 4 hour, 1 hour, 3 hour, whatever, right? As you can see here, 3 hour busy. So what do we notice? We notice that pre-market, we create Asian lows, London lows. Those are always something to target. We kind of have a run up above all these highs, run up to these highs too. So that's like, okay, big time sweep. Why is my magnet off? Don't know why. Equal highs here that get swept pre-market, 8:30, 8 a.m. We almost sweep this daily high, buy side, but we don't get there. So what's my bias? My bias is daily, and it's bullish because of this. We're so close to take out this buy side that I'm like, there's got to be a way that we come back today and we try to take out that buy side. And then my bias changed later during the day when Keegan told me that the options contract were being moved, expired, whatever, all that stuff. And I'm like, okay, well, then there's no volume. And if there is volume, it's going to be fucked. And if it's going to be fucked, I don't want to trade it. So that's exactly what happened. So I was like, okay, well, maybe we're not targeting this, but I want to play some kind of buyback or a pullback. Okay. So what was I expecting, right? Obviously, yeah, there's some kind of down move. 9:30 we open. Okay, what happens? 9:30 candle is actually down here, but at 9 we actually come all the way down. Actually, no, did this happen at 9? I'm pretty sure this happened, yeah, right before 9:30 open. Right before 9:30 open, we have this down move. Don't need this fair value gap anymore. Straight down, we take out London lows, Asian lows. I followed my strategy today, so the rules was don't start trading until it hits 10, until the clock hits 10, then all doors are open and you can enter a trade. Before that, you can't do anything. All you can do is watch and mark. Okay, so that's all I said. That's all I did. So we slept London and Asian lows, and we were trading in this 3 hour Bessie, which is now just considered a fair value gap. We trade right through it, all the way down into the zone, okay? And at first I didn't have the OT, and then I drew the OT from the near swing high to the swing low of the range. And then if you drew the discount and premium, or premium and discount, doesn't matter how you say it, you would notice that in the zone of accumulation, we were mostly in the discount area. So that's important to note, because if you're trying to buy, you want to be in the discount area, which is also shown on the OT. It's the 0.5, so anything under that is the discount. So this would be represented as the bullish buying OTE because it's in the discount area, which means that you're buying, okay? As you all know, right, the strategy OTE, you find a PD array inside the OT near the golden zone. You watch price action. Price action at one point came down, traded into that, tapped into it, closed above this fair value gap, created another kind of 1 minute, 3 minute fair value gap here, reaccumulation, marked all the way up here, waited for market structure shift, had one because we closed above these highs and we didn't close above these lows. So that means that we were bullish. I wanted to see a reaccumulation, kind of redistribution kind of setup. So what I did was I waited and waited for this to go up, which it did, like right during lunch. Trade into this. I would have liked to seen some kind of consequent encroachment action happen, but we just got this. Traded all the way down into this fair value gap. I did tell you guys before the stop recording that there was a 5 minute fair value gap here and here. So there was two that you could have entered off. If you entered on the first one, it's kind of risky because it hasn't gone to that fully big fair value gap consequent encroachment that we've traded through. So now it's basically like invisible in a way, so this isn't holding up as much as possible. And this just came off. This was a 1 hour fair value gap that was created off the 9 a.m. Or 9:25 distribution candle. So that's very strong too. That's a very strong reaction that we like to see. And the fact that we did not trade all the way up in the consequent encroachment, which means that we got some kind of selling power right away, which was very powerful. And that means if it's powerful, it's going to keep going to grab something even more powerful for the buyers. And that was this tap into this 3-hour fair value gap here that I used as support. That 5-minute fair value gap that was minuscule actually acted as support as it traded into it, and then it closed above. That's very, very important right here. That's very important, guys, right here. Because it closed above, it showed me bullish price action, and I was trusted. My risk management was like, okay, well, we're already under the consequent encroachment, which shows discount area. We're also basically out of the discount area already, so buyers have already stepped in, so now they're stepping in again, and this is your second chance to get in the market, okay? So that's what I did. So I got in right here. Why is that a short? I fucking hate how it's switched. Got in right here long. And then so my first obvious thing is the stop loss would be like under this low, right? Because you would think if this would be the bullet, like if your price action is right, this wouldn't come down. This should not come down and trade under and sweep this, right? Because if it closes above this, this is a final leg drawdown, and you're going back up, okay? So that's my stop. Very tight, very, very tight. And this was like a one contract kind of stuff, very tight. Now, what's the target? So obviously you have these highs as your first target. I'm going to mark this in green for like take profit. So it's your first take profit right here, okay? These highs. So already this is a nice trade. This is a very, very easy trade, very nice trade, no drawdown. But you could have a second contract and target maybe the high of this fair value gap right here. There we go. Okay, the fill of this fair value gap. Because if the move itself is already in this fair value gap, it does want to take it out as it was traded through. It does want to rebalance price, and that would be your second target. Again, if your first take profit was here, your break even would be, or your stop loss would be moved like up here, basically. Like you'd move your stop loss like up here. And then if you really wanted to play it, you could say, hey, this is where I personally gone out, like up here, right here. That would be my personal, like, okay, I'm out of the market. I'm good. I got my trade. We're all happy and nice. But you could have, like I said, you don't want to target this anymore because there was that low volume kind of option data, expiration date that came out, and we didn't want to trade any of this, and so that means that the volume itself isn't powerful enough. And yes, there's buyers, but there's not enough buyers to buy all back right when there's new option contracts. I mean, everything is new, everything's fresh, everything got reset, and so a lot of people will be selling, a lot of people will be buying. Doesn't mean that it's going to go all the way up here. So I want to play it safe for now. And the only last step you could have targeted is these highs, right? Like as the final liquidity. That's honestly what I could see and what I saw. And then if you wanted to be like sure of your position, let me delete this OT real quick so we can see better. You could have also drawn the OT, and this is the first time doing it. Let's see what it does. Let's see where the area is. Boom. So where's the golden area of the OTE of this whole move down here? Where's the OTE where we could reverse off? Right here, this zone right here. Let me draw it again in purple so you guys can see what I'm talking about. So this zone right here. Okay, so that's your zone, and the latest take profit is right before we sweep this OTE level. That's pretty good. And look at where price is. Actually, I wanted to notice this. This works, man. Look where price actually taps into the OT level, like the exact, like, look, if I delete this, it still taps. Like if I delete this fair value gap, let me just delete the fair value gap. It taps into that level. Why? Yeah, maybe there's a high here, but dude, that's precise, and it sweeps it. And your take profit was right before that. So pretty good trade. If you really did target everything, which I didn't, that would have been a really nice risk to reward. Your risk to reward might have been like under these lows, like that would have been nice to see. But if ICT taught you right, you should know that anything with price action means that if something goes against the price action or the order flow, it means that your trade is wrong, okay? And that you should get out the market as soon as possible and wait for some other setup to create. Because of this price action was already set in my mind, we already had a market structure shift. What I don't want to see is price trade under this, even though it just closed above and did a really nice move up. Okay, so my entry probably wasn't here. My entry, I probably got filled like around here or in the middle of this. I'm just going to mark it here. So yes, my stop loss was here because it was it's very tight because I don't want to be in drawdown and I don't want to lose my position, obviously, like any other trader. But I know that I've seen this. It's a reaccumulation. We have this first leg of distribution. Then we have that retracement back down, market structure shift, right? We have to have some kind of retracement. Strong selling power because we didn't hit the consequent encroachment. Guess what happens? We trade all the way through it and we target this OT high levels. And that was it, right? That was our trade. That's the trade you could have taken. And that was how we used the OT. I guess the quarterly theory, if you really look at it, 5 minute. Yep, we're already on the 5 minute. Accumulation here. Manipulation up, down, right? And then the distribution, I was just kind of waiting to trade this distribution because, oh yeah, another thing right here. Yeah, there was strong selling power because of the distribution. Right here, right at 12 p.m., when it hits 12:01, that means that we're in the new quarter, which is the distribution quarter. So right here, we have this strong move up, and in the distribution quarter, we hit this big 1 hour failure gap. So you're thinking to yourself, oh, it's just going to trade right through it. Wrong. I was expecting a move down, and because we're in distribution and we have that bullish order flow, I am not expecting bearish order flow to start creating for bearish momentum because we're in a bullish distribution because we just broke out of this range, creating a market structure shift. It wouldn't make sense with a market structure shift for us to break all the way up and then just start trading all the way down. That it just wouldn't make sense. We also have a PD array, 3 PD arrays lining all up. Actually, 1, 2, 3, 3 PD arrays lining all up at the same time. 4 PD arrays, my bad. 4 PD arrays lining all up at the same time with a daily bias, with order flow, and with an OT level that just got hit. That's enough confirmation for me to enter a trade risk low, or with low risk or high risk, whatever you want to say, okay? If price goes against your bias, if price goes against your plan, if price goes against what you don't want price to do, get out of the trade. It's better to lose a little bit than a lot. Trust me. And it's better to get out before you lose a lot than you know, you could be down for a second, like just down $5 for 1 second and get out. And the next thing you know, the candle goes up and you won the trade. But at least you had that risk management. At least you forced yourself to get out of the market, even though you could have made so much money. At least you realized that your position was not good and your trade and your entry was not good. At least you're thinking of that and you're taking action. That's psychology. That's hard psychology. And that's good to create as a young trader and a beginner trading. That's good. If you're in drawdown and your order flow and your bias is being disrespected and your trade itself is being disrespected, there's got to be a reason behind it and you got to look at the bigger picture. If your analysis isn't right, your trade isn't going to be right. That's it. It's that simple. I'll see you in the next video.